So please come back, please be seated. Online friends, am I audible? Am I audible? Please respond. Yes, all good. All good. So friends, let's continue our discussion. We were discussing about what? Section 35. Now we are about to complete 35 AD. Thereafter, we will be completing DDA, 36, 37, disallowances, and we will somehow finish our PGBP theory. Today anyways we will finish. We will try to finish it as early as possible so that I can give you a question that contains different provisions. Okay, we have lengthy questions in PGBP, but that I can give you only after completing the theory deductions as well as disallowances that we will be solving, no worries. So for the time being, let's discuss the remaining deductions. Okay. So friends, moving on to the next one, that is 35 AD. Can you read the heading? Investment linked tax incentives for specified business. So please. So read the heading again. I want all of you to read it together. What is the heading? Investment linked tax incentives. So let's understand what exactly is 35 AD and the other things. Listen. Section 35 AD says that. Are you all listening? Are you all listening? Section 35 AD says that if you are a specified business, if you are what? Specified business, that means a notified business, then you can claim 100% deduction for all your capital expenditure. Then you can claim what? 100% deduction for all the capital expenditure. Don't have to worry about claiming depreciation. Rather, you capitalize everything and charge 100% deduction for the every capitalized assets and claim it as a deduction under 35 AD. It's a wonderful offer. So listen, if you are what? A specified business, then what is your advantage? You can claim 100% deduction for all the capital expenditure that you are incurring. Are you with me? Subjected to limits and conditions. So let's first of all understand who all are the specified businesses. Specified businesses means what? Those notified businesses under 35 AD. But the fact here is you need to remember which all are the specified businesses, because in certain questions they will mix it up. They will give normal business and specified business. You should identify which is normal and which is specified. For that you should learn the specified businesses or the list of specified businesses. Are you all with me? Let's understand which is the first one. Can you read the first one? Setting up and operating cold chain facility. Like a cold storage, if you are running a cold storage, that is considered as a specified business. What is number 2? Setting up and operating warehousing facility for storage of agricultural produce. So you are a warehouse where you store agricultural produces. If you are doing that warehousing activity, that is considered as a specified business. Are you with me? Are you with me? Not agricultural produce and all. What they're saying is warehousing of agricultural produce. You are storing the warehouse or you are warehousing the agricultural produces, then you will be considered as a specified business. And what is next? Operating a cross-country natural gas or crude or petroleum oil pipeline network for distribution. It's not who manufactures crude or manufacture or extract natural gas. But what they're saying, if you are in the distribution of that too pipeline distribution, that too cross-country. What is cross-country pipeline? From India to Bangladesh, from India to Myanmar, from India to Sri Lanka. India to Pakistan, we don't have. So, I mean, you know that. Even BCCI is thinking whether to go and play Champions Trophy in Pakistan. BCCI is still thinking that. So, Pakistan say, if you don't come, we will call Sri Lanka. Okay, if you don't come, we will call Sri Lanka. But everybody knows that That if that trophy have to be successful, then India have to participate because the major revenue generator is BCCA as well as India. Okay, so if there is India-Pakistan match, then the gallery will be full. It will be like everybody will go over there and watch the match, and especially in viewership and all will be very high. But let's see in what happens. Okay, yeah. Forget about BCCI. Think about ICAI. Okay, yes. So moving on to the third point. What is the third business, friends? Building and operating a hotel of 2-star or above category anywhere in India. So you're running a 2-star or above category, like a 3-star, 4-star, 5-star, 7-star hotel in India. That also will be considered as a specified business. Now, what is the advantage of specified business? What is the advantage? You can claim 100% deduction for all the capital expenditures that you are incurring. Are you with me? If you are a specified business, you can claim 100% deduction for all the capital expenditure that you incur. So, we are discussing which all are the specified businesses. So, what is number 3? Can you read number 3? Building and operating a hospital anywhere in India with at least 100 beds for patients. That means if you are running a hospital and it's just like not a small private clinic. If you are a hospital, running a hospital, and that hospital should have a facility to accommodate 100 patients. That should be patient beds. Are you with me? So that is also regarded as a specified business. And what is next? Can you read the next one? Developing and building a housing project under slum rehabilitation. So slum rehabilitation means, have you heard about Dharavi in Mumbai? Their Kala movie, it's slum redevelopment and rehabilitation. Have you seen that Kala movie? If don't worry. Okay, forget about that. Slum rehabilitation means, say, what do you say? You are living in a slum, in an old dwelling. Okay, in an old, dangerously looking dwelling. So the local authority over there will take an initiative that they will demolish your old dwelling or old building and they will construct smaller houses for you. Are you with me? Are you with me? So these are normally called as slum redevelopment or rehabilitation. So if you are in the business of developing and building housing project for slum redevelopment or rehabilitation, then don't worry, that is considered as a specified business. Imagine one thing, say I am building normal flat as well as this slum rehabilitation buildings. Then what to do? The normal flat construction is normal business, business 1. And the slum rehabilitation is business number 2, specified business. If I have multiple business, then I have to separately maintain books of accounts. Then only I can claim this 35 AD. Are you with me? If I have multiple business, then always keep separate books of accounts for specified businesses. Then you can claim the deduction. Otherwise, you will not get the benefit of deduction. Janata Garage movie. Oh, is that so? So I don't remember. Janata Garage movie, there is a slum rehabilitation happening. I don't know. Yeah, whatever it is. So listen, coming back to the next point. Production of fertilizer in India. In VIP also. Okay, forget about movie. Okay. Agreed. And all the movie that you are about to say, agreed. Now think about production of fertilizer. Say, listen, you are a fertilizer manufacturer in India. Say you are what? A fertilizer manufacturer in India. You will be considered as a specified business. If you are in the manufacturing of fertilizer, you will be considered as a specified business. Then what is next? Setting up and operating an inland container depot or a container freight station. What is inland container depot? The place where hero and villain meets. In every movie, inland container depot is a place where hero and villain meets. If they meet, there will be a fight. I think in one of the Vijay movie, Vijay is coming in a Rolls Royce. And whenever he comes out of the car, villain will put a container over his Rolls Royce car. Come again? Varis movie. Yeah, Varisu, whatever it is. Varisu movie. It is like that. Okay. So Vijay then, after some punch dialogue and all, the person who put container over Vijay's car will try to put container over villain's car. Then he will show something like this. And he will show something like this and the villain. And that the person, the crane operator will understand. Okay. Nobody, other persons were like looking like this and the crane operator understood. Okay. That communication they have. So it is like that. I watched that movie. It is Varisu, right? Varisu. Yeah. So yes. Normally I watch Vijay, Rajnikant, Kamal Hassan movie. Okay, Kamal Hassan. No, I don't watch every Vijay movie. I don't watch every Rajnikant movie. I don't watch every Kamal Hassan movie as well. Okay, I think that one movie, latest Rajnikant movie, what was that? Not Jailer. After that, one movie was there. Lal Salam. I didn't watch. I didn't watch Lal Salam. Kochadian. I didn't watch. Don't watch. I know the danger. So Indian 2 I didn't watch. Then something like that. Don't watch. Okay. Yes. Normally, like watch Indian 2. Oh, revenge. Okay. No. I don't want to watch Indian 2 because I have that Indian 1 in my mind, and that is a kind of a great movie. I don't want to destroy that by watching Indian 2. I'll be watching Indian 3. Okay, I'll be watching Indian 3. Maybe Indian 3 Tata is 140 years or not out. Okay. Indian 2, I think he's some 120 years not out or something. Flashback. Then it will be super. Okay. I think in Indian 2, Tata's coming up with six-pack and all. Okay, yeah. Annate up. What happened is, one of my friend told me Annate is fantastic, okay. And what I did is I booked a ticket in the theater. I entered the theater, my God, screwed like anything. That is the one movie I want to get out of the theater, but Pasamana Tangachi. Just before 2 minutes of the marriage, she escaped. Pasamana Annan followed the Tangachi, killed every villain. Alright, so forget about the movies and coming back to the inland container depot and container freight station. If you are in the business of maintaining an inland container depot or container freight station, then we can definitely say that you are running a specified business. Inland container depot means the place where the containers are kept. Okay, and what is container freight station? That is the lorry business to transport the containers. If you are maintaining an ICD, that is inland container depot, or a container freight station, that is regarded as a specified business only. Moving on to the next one. What is the next one? Beekeeping and production of honey and bee wax. If you are in beekeeping and production of honey and bee wax business, you will be considered as a specified business. And what is next? Setting up and operating a warehousing facility for storage of sugar. Listen, they are not saying sugar manufacturers. They are saying warehousing for storing sugar. You have to be careful. Are you with me? In examination, if they are saying that you are a sugar manufacturer, don't take them as a specified business. Sugar manufacturers are not specified business. They are only normal business. If you are doing a warehousing business for storage of sugar, that only will be regarded as what? Specified business. Is sugar a agricultural produce? It's a processed product. Sugar cane is the agricultural produce. Sugar is actually a processed product. Are you with me? Are you with me? Moving on to the next one. Setting up and operating a semiconductor wafer fabrication manufacturing unit. So if you are in the business of manufacturing semiconductor, you will be considered as a specified business. And what is next? Laying and operating a slurry pipeline for transportation of iron ore. If you are in the business of transportation of iron ore, you will be considered as a specified business. And moving on to the next one, developing and building a housing project under affordable housing scheme. Affordable housing scheme is something related to studio flats, a normal small flat which is affordable, which is within the limited square feet and all. If you are in that particular business, you will be considered as a specified business. And to the last business, what is that? Indian company in the business of developing and operating and maintaining a infrastructure facility. What do you mean by infrastructure facility? You are talking about Indian serial. You put a smiley due to my Annate watching. Yeah? Okay. After Annate, I decided to be very cautious. Every time I inquire, okay, before I watch a movie, I will definitely wait for the review to come. Not that. Never. I have given something more than this to him. Okay, I've given something more than this to him. There is a dumb movie in Malayalam called Janagan. It's a dumb movie, okay. At that time, it was like 3-4 years before. Not 3-4 years, more than that. I watched that movie. Okay, it's actually acted by a actor called Mohan Lal. Okay, it was a dumb movie. I've told him that the movie is little bit lagging, but in climax there is a twist. I referred Shawshank Redemption. Have you seen Shawshank Redemption? You will understand. Okay. Just like Shawshank Redemption, in the climax, your mind will blow away. Yaar, I told him. And that guy trusted me. So what happened is the movie was very lagging and he somehow made him sit. Interval, he texted me, I thought of going out, but I said, no da, climax twist na super irke. So he somehow forcefully sit. At the end, there was nothing. Okay. In the end, it is more dumb. Okay, that's it. And he came out of that and he was like calling me. I didn't pick the call. I've given that to him. Okay. So thereafter, I was very cautious. But after 4 or 5 years, he took revenge. I didn't expect that. I expected that within 3-4 months, he will say same to me. But I didn't expect after 5 years, he took revenge. He watched Annate. I'm actually a very, I normally watch all the Kamal and Rajini movies. I'm actually a great fan of both Kamal and Rajini. So he knows that because I watched this Jailer FDFS. Then in Kerala. I watched the Shivaji from Tamil Nadu. Then Petai from Coimbatore. When you watch movie from here in Tamil Nadu, it's another vibe. It's another vibe. You will die because water will fall. Guilt will fall. After watching the movie, even your mother won't be able to recognize you. Full of color, guilt, everything will be there in your face. But it is like it's like a great experience to watch those movies. So he knows that and he took the revenge. But Annate was too much for me because mudiyadu. So coming back to the point, friends. So these are the specified businesses you have. And what is the speciality of having a specified business? Friends, tell me. What is the... Hello. Forget about Annate. Okay, think about specified business. What is the greatest advantage of having these businesses? You can claim 100% of the capital expenditure as a deduction while computing your total income. Are you with me? So that's what we are about to say. 100% of the capital expenditure incurred during the previous year, wholly and exclusively for the specified business, would be allowed as a deduction from the business income. 100%. So, but what they are saying is, expenditure incurred on acquisition of any land, goodwill, or financial instrument would not be eligible for deduction. So, 100% capital expenditure excluding these three. Which are the three exclusions? Number 1, expenditure for land, no deduction. Then, expenditure for purchasing goodwill, no deduction. Expenditure for purchasing any financial instrument like share, debenture, etc. No deduction. Are you with me? Are you with me? If you are incurring a capital expenditure either for the purchase of either land or a building or land or a goodwill or financial instrument, except these three, you will get a deduction for all other capital expenditures provided you are a specified business. Is that point clear? Is that point clear? But there is one thing. Say for example, I have expended 10 lakh rupees for a building. Imagine I have expended, I am a 4-star hotel and I constructed a building and the cost of building is how much? 10 lakh rupees. Are you all listening? While making payment, what department say? If a single day payment exceeds rupees 10,000, then method of payment should be either account pay check or account pay bank draft or electronic clearance system like RTGS, NEFT, etc. or through prescribed electronic mode. If I am not making the payment in any of these 4 modes, then the amount paid is not allowed as a deduction. Imagine, out of 10 lakh, I paid 2 lakh cash. 2 lakh cash and 8 lakh I paid via account pay check. Then only I can claim 8 lakh as a deduction. That 2 lakh that I've paid in a day, otherwise than by way of prescribed methods, are not allowed as deduction. Are you with me? Are you with me? So if I am making a payment in a single day and the amount of payment exceeding 10,000 rupees, then method of payment is important. What is the method of payment? Either account pay check or account pay, bank draft or electronic clearing system, or through prescribed electronic modes like Google Pay, debit card, credit card, etc. UPI, that's Google Pay, etc., etc. Are you with me? If I am not making the payment in the prescribed method, then what will happen? That amount that I paid shall not be allowable as a deduction under 35AD. Is that point clear? Say for example, instead of this, I paid 9,90,000 through account paycheck. Account paycheck and 10,000 in cash. Is that a problem? That is not a problem. Up to 10 I can pay in cash. If I'm paying more than 10, entire cash payment shall be disallowed. It's not like out of cash payment I can claim 10. It's not like that. If you're making a payment and the payment is, there is a threshold, and if the threshold exceeds 10,000, entire cash payment shall be fully disallowed. Have you got my point? Have you got my point? All right. So this is how you have to make the payment. Not this is how. This should be the method of payment that you have to make for claiming the deduction. I hope it is clear. Now moving on with the next one. B star. What blue settai uncle review and decide, sir? Blue settai uncle. Who's that blue settai uncle? Review man. Oh, YouTuber. All right. All right. But the problem is their Tamil will be like rocket Tamil. And it's very difficult for me to understand that kind of rocket Tamil. In Chennai, I can manage Tamil because I think people will speak English and Tamil. They don't use that send Tamil over here. But certain places, if we go, adukku oru tune irukku. Coimbatore also, it's a little bit mix of Malayalam will come in Coimbatore. But you go to Madurai, Salem and all, they will have a tune. That tune is very difficult to identify. There is a slang and that is very difficult to identify. If they don't mix English in between. But Chennai, Coimbatore, it's fine. I can manage. Yes. Yeah. Tirunelveli. Kelvipettirukken. Tirunelveli Alva. Kelvipettirukken. In purchase of machinery 10 lakh in cash, and we claim deduction under 35 as capital expenditure pre or post. In cash, no, you cannot claim. Whether it is pre or post, you cannot claim. You're talking about section 35, scientific research. There, that will come under, there also is a restriction. There is a thing called 40A3, common restriction, that we will study, okay? If you're making cash payment 10 lakh, even under 35, you cannot claim it as a deduction. It will come under the common restriction 40A3. For 35AD, it's a specific restriction. Yes. Then for sugar business, in sugar manufacturing business, they are also warehousing the sugar produced. Will they get this deduction? Yes, provided they maintain separate books of accounts for the manufacturing and separate books of accounts for the warehousing. They will get for warehousing only. And they should be exclusively in warehousing. No. It's not necessary that you should be exclusively in warehousing. You should have separate books of accounts. That's it. For warehousing, if you have, no problem, you can claim the deduction. If you maintain books of accounts together, then everything will be considered as normal business only. Yes. So listen, where were we? We were talking about the payment restriction. Now, can you read this? Prior commencement capital expenditure is allowed as deduction in the year of commencement if the same has been capitalized in the books of accounts of the assessee. Unlike section 35, here we don't have any 3-year restriction. Whatever pre-commencement expenditure that you incur in relation to 35 AD is allowed as a deduction in the year of commencement. Only one thing you have to check. What is that one thing? Whether you have capitalized it, you can claim that entire capitalized amount as a deduction. There is no 3-year restriction under 35 AD. All the pre-commencement capital nature expenditure, if you have capitalized it in the year of commencement, you can claim it as a deduction. I hope it is clear. Moving on to the next one, can you read the next note? I want all of you to read the next note along with me. Once assessee has claimed the benefit of 35 AD for a particular year in respect of specified business, he cannot claim the benefit under Chapter 6A under the heading C deductions or 10AA from the same business for the same or any other year and vice versa. For understanding this note, you should know what is this Chapter 6A C heading deduction. Do you know what is Chapter 6A C heading deduction? Do you know what is Chapter 6A C heading deduction? Yeah, chapter 6A C heading deduction doesn't mean all the chapter 6A deductions. Are you with me? Chapter 6A C heading deduction doesn't mean all the chapter 6A deduction. Under chapter 6A we have 80C, 80D, 80DD, 80DDB, 80G, 80GGA, GGB, GGC, etc. etc. Are you with me? Out of that, for inter, there are only 3 chapter 6A C heading deductions. There are A heading, B heading and C heading. And C heading for inter is deduction under section 80 JJAA is 1. Deduction under section 80 QQB is another one. And deduction under section 80 RRB is another one. Do you remember what is 80 JJAA deduction? If you are a manufacturer who is subjected to tax audit and you are creating more employment opportunities, then that employee cost, whatever you incur that employee cost, you can claim 30%. Exactly, very good, Ragul. You can claim that 30% of additional employee cost as a deduction. So JJAA is 30% of additional employee cost. You are giving new job opportunities, creating new job opportunities. That salary that you pay to your new employees, you take 30% of that salary as a deduction under 80 JJAA. Then what is 80 QQB? Any idea? Excellent. Deduction for royalty for the book authors. If you are a book author and that book is in the nature of scientific literature, then literary, scientific, etc., architecture, etc., then you can claim a deduction for the royalty income that you have received. So deduction for royalty. Deduction for royalty. Then what is 80 RRB? 80 RRB. If you are a patent owner and you are receiving royalty on patent, QQB is royalty for the book authors and RRB is the royalty for patent owners. If you are getting that, you can claim a deduction, and that deduction for royalty on patent. This is royalty for book authors. 80 QQB deduction is either the royalty income received or 3 lakh. If you are getting royalty as a percentage of the book sold, then 15% of the value of the book sold also will come in the limit. 80 RRB, it will be either rupees 3 lakh or the actual royalty on patent received, whichever is lower. Are you with me? Now what is this chapter 6A reference here? Very simple. Imagine, say you are a sugar warehousing. Okay, you are in the business of sugar warehousing. Are you all with me? Sugar warehousing is a specified business and you have claimed deduction. You have claimed deduction under section 35 AD. You have claimed deduction under 35 AD. Thereafter, don't come and ask for 80 JJAA deduction for creating new employment opportunity. Why? Because if you are a person who claimed 35 AD from the same business, you cannot claim any of the chapter 6A C heading deduction. Are you with me? Or vice versa. What is vice versa? You have already claimed a chapter 6A C heading deduction. Thereafter, don't come and ask for 35 AD. Either C heading or 35 AD. You will get either one, not both. For a business. Are you with me? Are you with me? Say there is one more possibility. Say, listen, this is Mr. A. Mr. A having sugar warehousing as well as he have mobile phone manufacturing. He has mobile phone manufacturing. Are you all with me? So both the companies are under Mr. A. Mr. A is the owner of both the entities. Sugar warehousing is specified business. Yes or no? Mobile phone manufacturing is a normal business. In this, you can claim what? 80 JJAA deduction. And from the other business, you can claim what? 35 AD deduction as well. So the restriction is not for an assessee. It is for a business. Have you understood this? Have you understood this? The restriction is for a assess, not for an assessee, it is for a business. That means in this year, I can claim 80 JJAA deduction for the mobile phone manufacturing and I can claim 35 AD deduction for the sugar warehousing. For one business, don't claim both. Are you all with me? Are you all with me? Moving on to the second one, there is one more restriction. What is that? 10AA deduction. What is 10AA? Is there any loss in 35 AD? Can we adjust with the business income? Normal business income? No, not possible. You can adjust it only with the specified business income. Specified business loss can be adjusted only with the specified business income. That we will discuss later. Okay, don't worry. Yeah. So tell me, what is 10AA deduction? 10AA deduction. If you have an entity in ZES. What is ZES? Special Economic Zone. In Chennai, we have a ZES. Yes, right? In Chennai, we have a ZES. Where it is? What is the place name? Come again? Thoraipakkam. Yeah, Thoraipakkam, there is a ZES. Yes, I know. In Kerala, Kochi, we have a ZES called, in a place called Kakanad. We have a ZES over there as well. So ZES is a Special Economic Zone. So what Income Tax Department says is, whoever start a unit in ZES is eligible for a 15-year exemption scheme or a 15-year deduction scheme. But right now it is restricted. You have to start your business before 31st March 2020 or at least before 31st March 2021. That means if I go start a business today in ZES, I'm not eligible for any deduction. But this deduction is there still in the Income Tax Act. So let's understand what is that particular deduction. Listen. So let's understand what is that particular deduction. Listen. Say, for example, I have a unit in ZES. Unit means a business in ZES. What department say? If I have a business in ZES, then I can claim deduction for how many years? 15 years. Department say first 5 years. First 5 years, I can claim 100% of my export profit as a deduction. 100% of export profit as a deduction. For the first 5 years, this ZES entity will be an export-oriented entity. Are you with me? Nobody will open an entity in ZES for doing domestic sales. You might be having some domestic sales, that's it. But majority of your sales will be export only. Are you with me? Are you with me? What is the point in opening a unit in ZES? Because the export barriers are very less. Like the customs and other things, export barriers are very less in ZES units. So, if you are operating a unit in ZES, for the first 5 years, how much is your exemption or deduction? 100% of your export profit is fully deductible or fully exempted. For the next 5 years, second set of 5 years, how much? 50% of export profit is exempted. For the third set of 5 years, how much is the exemption? 50% of export profit or amount invested in ZES reinvestment reserve, whichever is lower. Whichever is lower will be your exemption. That simply means from year 1, 2, 3, 4, 5, 100% of the export profit you can claim a deduction. From year 6, 7, 8, 9, 10, you can claim 50% of the export profit as a deduction. From 11, 12, 13, 14, 15, either 50% of the export profit or amount reinvested in ZES reserve. That means it's a special reserve. The amount invested in ZES reserve or 50% of the export profit, whichever is lower, is allowable as a deduction. Are you with me? Now, what is the context here? The point is, say you are a fertilizer manufacturer in ZES. You are what? A fertilizer manufacturer in ZES. Fertilizer manufacturers are specified business. If you are a manufacturer in ZES, you can claim this 10AA deduction, but you will get only one. Either 10AA or 35 AD, don't ask for both. Are you with me? Now something similar what we discussed earlier. If I have a mobile phone manufacturer in ZES and a fertilizer manufacturing in outside ZES, Then from the fertilizer manufacturing, I can claim 35 AD. And from the mobile phone manufacturing in ZES, I can claim 10 AA, no problem. From one business, I cannot claim both. Are you all with me? Are you all with me? So let's go back to that particular note and let's understand what is the meaning of that note. Can you read that note again along with me? Once the assessee has claimed the benefit of section 35 AD for a particular year in respect of a specified business, he cannot claim the benefit under chapter 6A under the heading C or 10 AA from the same business for the same or any other year, and vice versa. What is vice versa? It's your choice. You claim 10 AA, don't ask for 35 AD. You claim 35 AD, don't ask for 10 AA. Is that clear? Is that clear? Superb. No, not possible. Not possible. Yes, 10 AA and JJA you cannot claim. That is under chapter 6A C heading. That restriction is under C heading. You cannot claim both. Are you all with me? Yes. So, moving on to the next point. Can you read the next point? Fire Muda. Because the topics are that much duh. We have to somehow finish the topics. That's why. So, moving on to the next one, friends. Can you read the next note? Any asset in respect of which a deduction is claimed and allowed under section 35 AD shall be used only for the specified business for a period of 8 years. Listen, say for example, I have two businesses, one specified and one normal. I'm buying every capital asset in the name of specified. Then I am transferring that capital asset in the name of normal. I'm not selling it. I'm only using it for normal. Is that possible? No, not possible. If you want to claim deduction, then you have to use, if you are buying some capital expense assets for 35 AD business, you have to use it for how many years? Minimum 8 years. After 8 years, don't worry about transferring. Because after 8 years, that asset value will be anyways gone. So till 8 years, there is a lock-in period for the value of the asset. And you have to maintain that asset for the specified business for how many years? 8 years. You have to maintain that particular asset for the specified business for 8 years. You are not supposed to transfer it to any other businesses, or you are not supposed to transfer it outside as well. Are you with me? That is called as lock-in period. Now moving on to note number 1. Can you read note number 1? Loss from specified business can be set off against profit from another business irrespective of whether the later is eligible for deduction under 35 AD. So the point is very simple. We can also interpret it like that. Loss from specified business cannot be adjusted with the income from normal business. You can adjust only it with another specified business. Are you with me? Are you with me? So loss from specified business can be adjusted only with profit from specified business. If you don't have profit from specified business, then what to do? Carry forward. How many year? Indefinite period. You can carry forward it to indefinite or unlimited subsequent year until you have profit from specified business. And one more thing is there. It is not necessary that you have to adjust that particular loss from that respective business itself. It's not necessary. I have one 4-star hotel and I have one fertilizer manufacturing. The loss from the 4-star hotel, I can adjust it with the fertilizer manufacturing. No problem. Are you with me? Are you with me? It is not necessary that I have to adjust that particular loss from 4-star hotel profit itself. It's not necessary like that. Are you all with me? Have you understood what I said? So specified business loss can be set off only with specified business profit, and if you don't have profit, wait. How many years you have to wait? Any years you can wait. Okay, that's it. Now let's solve a small question. It's an easy question only, but that will definitely give you another better idea on this provision. So I'm making you solve this easy question. Why? Because you will get a better understanding over the topics, okay? That's why we are only making you solve easy questions, because we don't have tough questions. It's too early for tough questions. Only after completing PGP, I will be able to give you some challenging questions. I'll put this question in one page so that you can easily read and give me the answer. Oh, sorry. So this is the yesterday's question. Okay, I took the wrong question. Where is this question? One second, friends. Yeah, just go through this question and give me the answer. It's easy only, okay? It's actually simple only, but provided you correctly read the question, it will be very easy. If you don't read it properly, then definitely this will be tough for you. Read it properly, understand the question, read the question, understand the question, and do the needful, okay? I need the final taxable income. So, being a easy question, let's solve it together. Let's not waste time. Mr. A commenced the operations of business of setting up a warehousing facility for storage of food grains, sugar, and edible oil on 1/4/23. So, they started the business on when? They started the business when? 1st April 2023. He incurred capital expenditure of 80 lakh, 60 lakh and 50 lakh respectively on purchase of land and building during the period that is from January 23 to March 23 exclusively for the above businesses, and capitalize the same in the books of accounts as on 1st April 2023. So, as you all know, this 80, 60, 50 is actually a pre-commencement expenditure because that is incurred from January 23 to March 23 and you started your business on April 23. So, it is just before the commencement of business. So, you tell me what is the treatment? No treatment, you can capitalize it and claim the deduction. So, let's write a note over here. So, you have three businesses. Which all are the businesses? Warehousing of food grains and warehousing of sugar. It's warehousing of sugar and warehousing of edible oil. First of all, you tell me, out of these three, which all are specified and which is normal? Warehousing of food grains means agricultural produce, wheat, barley, maize, etc. Then how about warehousing of sugar? That is specifically given under 35 AD. What is this edible oil? Edible oil means coconut oil is an edible oil, sunflower oil is an edible oil. That is not agricultural produce. It's a processed product. It's a normal business only. So this is normal. And the other two are specified. If in the case of specified, then what you can do? Capitalize the expenditure and claim the deduction. In the case of a normal, what to do? Capitalize and claim depreciation. Are you with me? This is how the treatment is. So what we can do is, we can write the pre-commencement expenditure first. So pre-commencement capital expenditure. How much is the pre-commencement capital expenditure? First one. It is 80 lakhs. So including land 80. So you have to write full because you have to write the steps, right? So you have to write it in full, including land it is 80. Second one, 80, 60, third one, 50. Now, from that, what they are saying next is, respectively on the purchase of land and building during January 23, March 23, exclusively for the above business and capitalize the same in the books of accounts on 1st April 2023. The cost of land included in the above figure is 50, 40, 30. You have to remove the cost of land. Why? Because you will not get 35 AD as well as you will not get depreciation on the cost of land. So we will remove the cost of land. So cost of land. How about the value of cost of land? Which all are the values? 50, 40, 30. 50, 40, 30. Now you tell me how much is the exclusive expenditure for building? 30, 20, 20. Now what is next in the question? See, during previous year 23-24, he incurred capital expenditure of 20, 15 and 10 respectively for the extension or reconstruction of the building, purchase and used exclusively for the above business. So he have incurred another expenditure that is 20, 15 and 10 for extension of that particular building. So that is also allowable as deduction. So extension of building. How much is the extension of building? Cost 20, 15 and 10 respectively. So how much is the total cost? 50 lakh, 35 lakh, 30 lakh. This is the total cost. Total cost for building. All right. Now what's next? What is next now? Okay, our question is here itself, right? Yeah. So what is next? Compute the income under PGBP for assessment year 24-25 and losses to be carried forward, assuming that Mr. A have fulfilled all the conditions for the claim. All the conditions, where it is? the claim of deduction under 35 AD and has not claimed any Chapter 6A under the heading C, deduction in respect of certain incomes. The profits from business of setting up a warehousing facility forage of food grains, sugar and edible oil. Profits are given. These profits are before claiming deduction under 35 AD and section 32 depreciation. For assessment year 24-25 is 16, 14 and 31. So 16 lakh 14 lakhs and 31 lakh is the profit from the activity. So we will write the profits. We'll write the profits before 35 AD and 32, 16, 14 and what is the third one? 31 lakh. Now from the first business you can claim, first two businesses you can claim 35 AD deduction. How much is 35 AD deduction? First one 50 lakh. Second one 35 lakhs. And third one no 35 AD. Now, in about depreciation under section 32, for the first two businesses, you cannot claim depreciation. Why? You have claimed the entire cost as a deduction. Third business, you can claim depreciation. How much is the depreciation? 30 lakh into 10%. Since it is building, the rate of depreciation is 10%. And it will be 30 lakh into 10%. And can you tell me how much is 30 lakh into 10%? 3 lakhs. And how much will be the loss or profit? First case, loss. How much is the loss? How much is the loss? 34 lakhs. Second case, how much is the loss? 21 lakh. And third case, how much is the loss? Not loss, profit. It will be 28 lakh profit. Can you adjust these two losses with the profits? Can you adjust these two losses with the profits? No. Why? Because specified business loss can be adjusted only with specified business profits, not with the normal business profits. So how much is the total loss? 55 lakhs is the total loss that have to be carried forward to subsequent year. And the taxable profit will be 28 lakh. Are you with me? This is the final answer. Are you all with me? Ragul, you want the question or the answer? How to identify normal business or specified business? Study the list of specified business. Then you will identify. Okay. For me, I missed the deduction depreciation for eligible oil business. Apart from that, everything is correct. Okay. Next time, you will make it right. Don't worry. Done. Great. You want the question again? Yeah, I'll show it to you. Somebody is taking the picture of answers. You got the answers? Yeah, I'll show the question also. This is actually institute study material question. Okay, it's actually an institute study material question. Yeah, so I hope it is clear. Now moving on with the next concept, friends. Moving on with the next concept where we were discussing 35 AD. Now the next important section. I'm only selected important sections under PGUP. Okay. Next important section in my opinion is amortization of expenditure incurred under voluntary retirement scheme. So, do you remember voluntary retirement? Voluntary retirement. What is voluntary retirement? Tell me, what was voluntary retirement? Before the age itself, the employee is retiring from our company. That is said to be what? Voluntary retirement. So, when an employee is, retiring voluntarily, we have to pay him what? A compensation. It is called as voluntary retirement compensation. Do you remember that? Do you remember that? So whenever an employee retire voluntarily, we have to give him a voluntary retirement compensation. For the employee, it's an income. For the employer, it's a expense or it's a cost. If it is a cost, then he should be given with a deduction. And that deduction is covered under which section? 35D.A. And the point is what department say? The entire amount that you pay to your employee at the time of voluntary retirement is allowed as a deduction in 5 equal annual installments. Are you with me? Are you all listening? Are you all listening? The entire compensation that you are paying to a employee under voluntary retirement is allowable as a deduction, but not in a way, or not all of a sudden. Rather, what you need to do is you need to amortize it, or you need to claim it as a deduction in 5 equal annual installment. Is that point clear? So that is this, deduction for such expenditure shall be allowed in 5 equal annual installment. You can cross off this note because this note is not there as a part of your new syllabus. It's a reorganization, succession point, etc. You can cross off this particular note from your revision handout. Okay. Yes. Now, 35 DDA is such a simple section. Whatever amount you pay, claim it as a reduction in 5 equal annual installment bus. Is that clear? Is that clear? Now, friends, now the second last deduction, we are about to start the second last deduction, that is deduction under 36. Can you read the heading? Section 36, other specified deductions. Before I start other specified deduction, let me give you a statutory warning. Have you seen Kaidi movie? Have you seen Vikram? Have you seen KGF 2? There are certain specialities in these movies. In these 3 movies, there is a common scene. The hero is coming up with an automated machine gun. Periyappa, Muthamma, something like that. In KGF 2, it is like that. And in Vikram, Kamal Hassan is coming up with an automated gun. And in Kaidi, I think, what is his name? Karthi is coming up with a kind of a machine gun. Yes or no? Perima. Okay, whatever it is. Periyappa, Periyamma. Kasa Panama. Okay. So, listen, see, something like that. I am about to start my machine gun. I will continuously fire the deductions. Okay. It is like short, simple deduction. So, I have no plans to pause. I will keep on firing provisions at you. I'm not saying don't sleep. I'm saying don't die. Somehow you have to survive. Are you with me? Are you with me? Are you all ready for the firing? Yes, so let's start the deductions one by one because we have a lot of deductions. Okay, this is section 36. This much is section 36. Around 1 page of deductions we have. That too small and short. So let's start with the first item under section 36. And what is the first item? I want all of you to properly read that along with me. Okay, so read that first one. Insurance premium paid. And what is that? Insurance premium paid on stock or stores of business or profession is allowed as deduction. You can cross off this paid, okay, because there are 2 paid in one sentence. You can cross off that second paid. Now read that again. Insurance premium paid on stock or stores of a business or profession is allowed as a deduction. What do you mean by stock? Stock in trade. What do you mean by stores? Consumables and stationaries. If you have taken an insurance either on your stock in trade or on the consumables, the premium that you are paying is allowed as a deduction. Are you all with me? If you have taken an insurance either on your stores or on your stock in trade, the premium that you have paid is allowed as a deduction under section 36. Is that point clear, friends? Now, moving on to the next one. What is the second deduction? Can you read the second deduction? Premium paid by employer for the health insurance of employees. Say you are an employer and you have taken a group health insurance for the benefit of employees. In certain company, these employees will get health cards. Maybe if your parents are working in some companies, they might have a health card. What is the advantage of health card? You can go to the hospitals which they have a tie-up. You can go to that hospitals and show that health card. You will get medical treatment for free up to certain levels. Are you with me? For that, your employer might be paying a premium amount for the benefit of that group health insurance. Are you all here? Are you all here? So, if the premium paid by the employer and that premium have to be paid in any mode other than cash. The premium have to be paid in any mode other than cash, that is allowed as a deduction. Are you all with me? So if the employer is paying a premium for the benefit of the health insurance of the employee and the mode of payment is other than cash, it is allowed as a deduction. I hope that point is also clear. So how about premium paid for the stock and stores? What should be the mode of payment? What is the mode of payment for the stock and stores? First item. Can you pay it in cash? You can pay it in cash, but the single day payment should not exceed 10,000. If that exceeds 10,000, that will come under 40A3 common disallowance. Are you with me? If you are paying a premium, insurance premium for the stock and stores, and that insurance premium that you pay in a single day exceeds 10,000, and the payment is in cash or other than prescribed modes, then what will happen? Disallowance under 40A3 will come into the picture, and that amount that you paid is not allowed as a deduction. Are you with me? How about health insurance premium? Even if you pay 1 rupee in cash, you will not get the deduction. That's why there is a restriction here itself, other than cash. You got it? Understood? Yes. I hope somebody was asking that. Yeah. Insurance paid. Yes, Huma. Got it. Very good. So you keep on asking your doubts like this. Technical doubts, I can definitely answer. All right. So moving on to the next one. What is the third one? Read the third one. Bonus and commission. If the employer is paying some kind of a bonus or commission to his employees, that also is allowed as a reduction under section 36. But there is one condition. It is subjected to section 43B. Friends, listen. In PGBP, how do you compute the taxable profit? In PGBP, how do you compute the taxable profit? The computation is actually based on the method of accounting followed by the assessee. The computation is actually based on the method of accounting followed by assessee. There are two allowable or recognized method of accounting. Number one, mercantile system. That means on accrual basis you can show. Number two, cash system. Whatever received is your income, whatever paid is your expense. Are you with me? Are you with me? Imagine you are maintaining your books of accounts on mercantile system. 99.99% cases it will be mercantile system only. Imagine you are maintaining your books of accounts in mercantile system. You will, the bonus, say it is payable status. The bonus is in what? Payable status. You will put a payable entry and you will claim it as a deduction. Yes or no? But department say not allowed. For bonus and commission, all those items which are covered under 43B, you have to actually make the payment. Are you with me? Are you with me? For all those items which are covered under 43B that we will discuss today itself, we will discuss 43B. That is the last section that we have in PGBP. 43B, items under 43B, you will get it as a deduction only on one condition. That what is that one condition? You have to actually make the payment. Then only you will get the deduction. Are you with me? Are you with me? So, even though you have put a payable entry, you cannot claim a deduction under 43B. Sorry, you cannot claim a deduction under 36. Why? Because it is subjected to 43B. This is called as, what do you say? I forgot the interpretation name. This is the problem. I've told you that I'll forget easily. This is called as harmonious construction. Certain words I'll easily forget. I've told you yesterday, I think. Do you remember that? I'll keep on forgetting everything. Come again? Edusdem generis. Yeah. Like that, there is another interpretation called as harmonious construction. Yes, it is called as harmonious construction. What is harmonious construction? 36 is subjected to 43B. 36, income tax department say you claim it as a reduction. When it comes to 43B, they are saying not allowable a reduction unless you actually make the payment. Which is right? Both are right. 36 is subjected to 43B. It is called as harmonious construction. Are you with me? Yes. Yes. Because 43B is a temporary disallowance. You put a payable entry this year and you claim it as a deduction on the payable basis. Sorry, you don't claim it as a deduction because if it is disallowed due to that payable status and you actually make the payment in the next year, you can claim that particular deduction in the next year on actual payment basis. Got it? It's a temporary disallowance. When you actually make the payment, you can claim the deduction. Excuse me. Come again. We can claim those over 5 period. 5-year period. What? That is DDA. Gajaniya. That Surya movie, right? They avlo illa illada. Adu vandu what they are saying, short term memory loss, something like that, right? Then whatever it is. My bad, sir, I confused it with the preliminary expenses. Okay, no. Preliminary expense I haven't covered. Why? Because never asked in exam. In the history of ICA, they have never asked anything in relation to preliminary expenses. 35D, never asked. Yeah. Income tax thing I remember. Why? Because every day I'm doing this. Okay, so that I remember. Apart from that, all right. I mean, that doesn't mean I completely forget. That will not come. That will get, I know it, but that will not come. Inge irukku, ana inge varadu. Okay. Yeah, the payment is not done. Yes. 43B we will discuss later. Okay. If payment is not done, but payable entry is done, then we can claim it as a deduction under 36. No. Payment not done, items covered under 43B, you cannot. You just wait for the 43B. Okay. We will cover that in detail under 43B. So, bonus and commission under section 36 is allowed as a deduction subjected to a condition under 43B. And what is that condition? On actual payment basis only you can claim the deduction. Can you read the next one? Interest on borrowed capital. You tell me, what do you mean by interest on borrowed capital? You have taken a loan for your business or profession. All the interest in relation to that particular loan is allowed as a deduction under section 36. Are you with me? Are you with me? You have taken a loan for the purpose of your business or profession. All the interest that you are paying in relation to that particular loan is allowed as a deduction under section 36. So can you read the other side of this? Deduction of interest is allowed in respect of capital borrowed for the purpose of business or profession. But under that there is a note, and can you read that note? Interest paid on loan for acquiring a capital asset shall be capitalized till such asset was first put to use. Thereafter the same shall be allowed as a deduction under section 36. Are you with me? Interest paid on loan in relation to a acquisition of a capital asset. That proportionate interest until you put to use that particular capital asset have to be capitalized. Only the rest can be allowed as a deduction under section 36. Have you studied borrowing cost in AS? Borrowing cost. Okay, forget about borrowing cost and listen over here. I'll give you an example for a better understanding. And listen. Imagine, say on 1st April 2023, we have purchased an asset for 10 lakh. I have purchased the plant and machinery for 10 lakh. By taking that entire 10 lakh as loan, I took a loan of rupees 10 lakh at an interest of 12%. Are you with me? I purchased an asset on 1st April 2023 and the amount of, or the purchase cost of asset is 10 lakh. The 100% I took a loan and the interest of loan is how much? 12%. Say it is like that. Now listen, in this case, what I've done is, say I took around say 10 months to complete the installation. Say it's a huge plant and machinery. So I took how many months? 10 months to complete the installation. Took 10 months to complete the installation means put to use is on say 31st or 1st January or 31st January or 1st February will take. 1st February 2024 is the put to use. Are you with me? Are you with me? So the date of put to use is on 1st February 2024. Now you tell me, how much is my annual interest? How much is my total interest? 12% on 10 lakh will be 1,20,000. Annual interest will be how much, friends? 1,20,000. Can I claim that entire 1,20,000 as a deduction under section 36? No, I cannot claim that entire 1,20,000 as a deduction under 36. Then what should I do? What should I do is, I need to split up that interest from the date of loan till date of put to use. How many months are there? 10 months. So 1,20,000 divided by 12 months into 10 months means how much? 1 lakh. That 1 lakh I have to capitalize along with the cost of acquisition of asset. Purchase cost is 10. I have to capitalize 1 and I have to make it 11 lakh. On the remaining 20,000, I can claim as a deduction under section 36. Are you all here? If situation is like this, only those proportionate interest after put to use, I can claim as a deduction. Until I put to use all the proportionate interest, I have to mandatorily capitalize with the actual cost of the asset. Thereafter, on 11 lakh, I can claim what? Depreciation. And what will be the rate of depreciation? What will be the rate of depreciation? It is 7.5 because it's a general normal plant and machinery, and the rate of depreciation will be 7.5% on 11 lakh. Are you with me? Why 7.5? Put to use on 1st February, less than 180 days. So normal depreciation is 15, but I can only claim 7.5% as a depreciation. Is that point clear? Is that point clear? Yes. These kinds of things you have to be careful because they may test. They may test these kinds of things by giving some numbers, dates and all. Are you with me? Are you with me? Yes. Yes. A16, same treatment in A16 also. Yes. Moving on. So can you read that note again now? I want all of you to read that particular note, including online. Please read it together. Interest paid on So thereafter the same is allowed as a deduction under section 36 subsection 1 clause number 3. I hope that is clear. Sir, now income tax rate have changed. That is not applicable for September as well as your January 2025. Okay. We have to put some using new rates or old rates. This, I think I told this earlier. You don't have to follow the changes happened yesterday. Okay. Yeah. Moving on. Interest on borrowed capital. Yeah. What is the next item? Can you read the next item? Contributions to Provident Fund and other funds. Listen, yesterday, hope you remember, yesterday or day before yesterday, we have discussed the PF contribution. To a PF, there is employer contribution and employee contribution. Employer contribution is actually a cost for the employer, and he should be given with a deduction, and that deduction is covered under section 36. Let's understand what exactly is that particular deduction. Can you read the point? Employer's contribution to employees recognized provident fund, approved superannuation fund or approved gratuity fund are allowed as deduction. How many types of provident funds we have? Statutory Provident Fund, employers' contribution to Statutory Provident Fund is not covered under 36. It is under 37, general deduction. Because here they are only saying RPF. Employer contribution to RPF is covered under 36. Employer contribution to URPF is never allowed as a deduction. It is a disallowance under 40A9. We have a specific disallowance called as 40A9 that we will discuss under the disallowance category. There is no employer contribution to PPF. Are you with me? It is only assessees on contribution to the PPF. Are you with me? So it depends upon the type of contribution. You should decide. You should adjust that in your examination. Are you all here? You should learn a thing in that manner. Because in examination, they will never ask this theory. They will say something. You should be able to identify what is the treatment in IT Act. Are you with me? Are you with me? So read that again. Employers' contribution to employees recognized provident fund, approved superannuation fund or approved gratuity fund are allowable as deduction under section 36. Is that clear? Now can you read the next deduction? I told you this is like I'll continuously fire deductions. This is the one. Because we have to finish up 36 and we can easily do that. I hope you are able to follow what I'm saying. Are you all able to follow what I'm saying? Yes, now, next one. Can you read the next one? Employer's contribution to the account of employee under pension scheme referred under section 80 CCD. Say that simply means into the pension fund also, 1 second. All these are 100% reduction only. Yes, 100% reduction only. Whatever amount that you expended, that amount you can claim as a reduction. Yes. So we can say 100%. Now listen, say to a pension fund also, how a pension fund works, very simple. Employer will contribute. Employee also will contribute to a pension fund. Are you with me? It is like RPF only. To a pension fund also, employer and employee will contribute. Normally it will be equal contribution. Now you imagine the employer's contribution to the pension fund is actually a cost for the employer. Yes or no? That should be allowed as a deduction. And how much is the deduction? What department say is employer's contribution to the account of employee under national pension scheme. Deduction would be restricted to 10% of the salary of employee in the previous year. You will get a deduction for the pension contribution, but how much is the maximum deduction? How much is the maximum deduction? 10% of the salary. What is the definition for salary here? Basic salary plus DA forms part of the retirement benefit. Excess shall be disallowed under section 40A9. If you are contributing more than 10% of basic plus DA, excess shall be disallowed under section 40A9. Is that point clear? Hello, is that point clear? Are you all dead? Yeah, then let me recall you from dead. Don't worry. I'll give you a small question. It's a very easy question, but still, otherwise you guys will sleep, okay? So, I don't want to continuously put theory, even though it is a revision. I'll give you a small easy question, okay? Solve it quickly. There is that. It's fine. Yeah, just go through this question number 10 and give me the answer. It's an easy question, okay? Your institute study material question only. Just go through this question Q10 and give me the answer. This is nothing, very easy. Yes, Manoj, you are right. You have to say the reduction as well as the disallowance, okay? Done? Very simple. So X Limited contributes 20% of basic salary to the account of each employee under pension scheme referred under 80 CCD. The earner's allowance is 40% of the basic salary and it forms part of the pay of the employees. Compute the amount of deduction allowable under 36 subsection 1 clause 4A if the basic salary of the employee is aggregating to rupees 10 lakh. Would the disallowance under 40A9 be attracted, and if so, to what extent? You tell me, how much is the basic salary? Basic salary is how much? 10 lakhs. So how much is the actual contribution to the pension fund by the employer? How much is the actual contribution given by the employer? We can say actual contribution of employer is 20% of 10 lakh. That will be 2 lakhs. How much is deductible? Under section 36, only 10% of basic plus DA forms part of the retirement benefit is only allowable as deduction. Basic is 10. How much is DA forms part of the retirement benefit? 40% of the basic. That means 4 lakh. So altogether it is 14 lakh. So you will only get a deduction for 10% into 14 lakh. That will be 1,40,000. And what will happen to the remaining 60,000? The remaining 60,000 shall be disallowed under section 40A9. This should be the answer. I hope it is clear for you. They are asking 40A9 and deduction. So we have written both disallowance and deduction. I hope it is clear. So moving on with the next one. Moving on with the next deduction that we have is, can you read the next one? Amount received by assessee as contribution from his employees towards their welfare fund to be allowed only if such amount is credited on or before due date. So can you read the second side, the other side? Such contribution from the employee is treated as income of the employer under section 224 clause number 10. 2 subsection 24 clause number 10. Don't read it X. It is Roman numeral 10. Now, subsequently, when such amount, with such sum is credited by the employer to the employee's account in the relevant fund, on or before due date of crediting such contribution prescribed under the relevant act, then deduction is allowed. Imagine, say, think about RPF. Think about what? RPF. To the RPF, both the employer as well as the employee puts a contribution. Are you with me? Are you with me? To the RPF, both the employer as well as the employee puts a contribution. We will make use of an example. Say for example, there is a recognized provident fund and there is employer is there and there is employee. Say the salary of the employee is say 10 lakh. How much is the salary? 10 lakh. Say the employer is deducting 1 lakh from this salary and he will pay only 9 lakh to the employee and he will deduct this 1 lakh and he will make the payment to the RPF. So he will take another 1 lakh from his pocket. We can say out of pocket. And 1 lakh is the deducted amount from the salary. This is from employee's salary. Are you all with me? Are you all with me? So total contribution to the RPF will be how much? 2 lakh. This we have already explained in salary. But one thing, from the perspective of employer, this 1 lakh from his pocket is a deduction under section 36 that we have already discussed. Yes or no? Yes or no? His out of pocket contribution to that particular RPF is allowable as a deduction under section 36. Now imagine he is deducting an amount from the employee. He is deducting an amount of how much? 1 lakh rupees from his employee. Yes or no? Income tax department say whenever you deduct a contribution from that employee's salary, that deducted amount is deemed to be your income. We will consider that deducted 1 lakh as the employer's income. Thereafter, if you correctly within due date you make the payment to the RPF, you can claim that entire 1 lakh as a deduction. The impact is nil. But whenever you deduct it, we will treat it as your income. Whose income? Employer's income. And when you correctly make the payment, if you correctly make the payment only, we will allow you it as a deduction. Why there is a provision like this? Otherwise, what will happen? Employer will deduct and keep it for himself. Because every businessman will have a liquidity issue. Working capital management is actually a skill. If you are not properly following that, you will definitely have a working capital issue will be there. Yes or no? Yes or no? Every businessman will definitely have that working capital issue. So if you are deducting it and not making the correct payment, that will be an income forever. If you miss the due date, which due date? As per the relevant act. If it is PF, it is PF Act. In PF Act, you have to pay it within 15 days of closure of a month. Say this today, if I'm deducting it, I have to make the payment before 15th of next month. Are you with me? Are you with me? So the point is very simple. I'll repeat that again. When the employer deducts employee's contribution to the provident fund or any labor welfare fund, that amount deducted by the employer shall be treated as income of the employer. After that, the employer is supposed to make the payment to the RPF or whatever the fund it is within due date under the relevant act, whatever the act it is under. Under the relevant act, the employer is supposed to make the payment. If he makes the payment like that, he can claim that deduction. So at the time of cutting the salary, income, when you actually make the payment, it is allowed as deduction provided you are actually making the payment on or before due date of the respective or the relevant act. Is that clear? Is that clear? No, not allowed as deduction. After due date, if you make the payment, you don't get it as a deduction. Then don't think that the employer will not make the payment because he have to pay the penalty and interest according to the PF Act. This is only under Income Tax Act. Income Tax Act also is giving him a hit. Okay, he will get a lot of hits from PF Act, like penalty, interest and there in the PF Act. Yeah. Sir, I didn't get that. Thame right. FIR or what are you saying? Like, okay, whatever it is. You ask it again, VV. I didn't get. Okay. Taxed for employer if not paid on time. Ah, yes. Oh, that's what you meant. Even you, after 1 week, you check that chat. You yourself will not understand that. Okay. Yeah. So coming back to the point, friends. Coming back to the point. We were discussing about what? That employee's contribution to the PF. When the employer deduct that, that will become his income. And when he makes the payment after that, that can be claimed as a deduction. Now moving on to the next one. What is the next one? Bad debts. What is bad debt? Complete silence. What is bad debt? What is bad debt? Bad debt means you have done a credit sale. Okay. Your buyer is supposed to make you a payment. He will be dash in your books of accounts. There is a technical name for him. You have done a credit sale. Your buyer is supposed to make you a payment. Your buyer will be dash in your books of accounts. Debtors. Your buyer will be debtors in your books of accounts. Are you all with me? When you have done that credit sale, that is a sale. That will come in your P&L. If you are maintaining books of accounts in mercantile system. If cash system, don't worry. Are you with me? You have shown it as a part of your sales and you have paid the taxes. In the next year only, you came to know that the debtor is not going to make you the payment. He escaped. He shifted to Singapore. Now you cannot chase him like Singham. If you are Singham, you will chase him. Okay, you will hunt him down. You will wait for him to leave the country. You will not do anything until he leaves the country. Once he left the country, you will chase him down. Australia, Africa, wherever it is, you go and hunt him down. I'm actually a great fan of Surya, except for Singham series. I watch every J Beam and the other one. There is another movie, Surarai Potra. Wonderful movies. It's a gem of class movies. It is, except for Singham. In Singham, there is a scene. He will come like a tiger, not lion. Singham, not lion. He's come with a lion and he will hit the villain, and the villain will bounce. Just like Britley bouncer, that villain will bounce. And I mean, again, except Singham and that Rolex character and all. Super it is. Coming back to the point, forget about Singham. Think about bad debts. Okay. 24 also good movie. Yes, I love 24 also. Yeah, that watch movie, right? Ah, yes. So, bad debts, what they are saying is, to claim bad debts as a deduction there, you have to satisfy certain condition. You have to satisfy what? Certain conditions to claim bad debts as what? A deduction. Which are the conditions? Number one, the debts or loans should be in respect of business which was carried on by the assessee during the relevant previous year. That means the debts we are talking about should be connected to your business. Then only you claim that bad as a deduction from your business. Are you with me? Are you with me? Point number two. The debt should have been taken into account in computing the income of the assessee. I've told you, you have done a credit sale and that sale is there in your P&L account and you shown it as your income. Thereafter only you understood that that person is not going to make you the payment. So you are actually reversing it. Are you with me? Bad debts allowed as a deduction is just like a reversal entry of the income that you have already shown in your P&L account. Are you all here? Because in income tax, there is nothing called a reversal entry. Either it is income or expense. So the income that you have already shown, now you reverse it by claiming it as a deduction. Then what is point number three? It should be actually written off in the books of accounts of the assessee. You have to actually write off by simply putting a provision. Don't come and ask for a deduction. What's the difference between provision and actual writing off? Provision means you will write provision for bad and doubtful debts. I don't know whether he will become debtor. He will become bad, but for certain period of time when I'm calling him, he's not attending the calls. So I have a hint right now. I have a doubt. That's why I'm putting it as a provision, not allowable as a deduction. Once it is sure, you write it off from your books of accounts and you claim it as a deduction. Then what is the last one? Bad debt of discontinued business is not allowed as a deduction even though the assessee has any other business continued. Once a business is discontinued, then all the bad debts in relation to that business is also gone. Don't claim that bad debts as a deduction from your another businesses and all. It's not possible. Are you all with me? Are you all with me? Now let me ask you one simple doubt. What if I got that bad debt, say for example, in 2021, I have done a credit sale. In 2021, I have done a credit sale. In 2022, that become bad. That person called me and he said that I'm not going to make you the payment. So I've written it as bad debt and claimed a deduction. In 2023, he came back. Okay, he came back and he paid all the money. He went to some saint and all and he became a new person and he came back and he paid that entire money. Then what should be the treatment? Year of sale, it should be your income in the P&L and that will come as a taxable profit. Year of bad debt, you claim it as your deduction under 36. Year of recovery, you show it as your income again. Are you with me? It is called as what? Recovery of bad debts. That's what departments say. Don't show in book. Oh, don't show in book. Okay, then I think I have to, what do you say? I have to make you attend some of the sessions of some of the gods, okay? There are actually a lot of gods available everywhere in India. Do you know that? Everywhere in India, there are a lot of gods. Not God. God is original God. There are gods. God, G-O-D is the original God. We will say G-A-A-D. God. What is God? You don't know what is God? Okay. Say tomorrow, I'm wearing a white dress. Okay, tomorrow I'm wearing a white dress. Or forget about me. Imagine, where is your exam center in Chennai? I'll tell you, the most profitable business in India. Where is the exam center in Chennai? Which is the major exam center in Chennai? Women's College. Okay, Women's College, don't worry. Say Women's College. In front of the Women's College, just before the exam, first day of exam, you do one thing. You place a white sheet. Okay, white sheet with a stone. Just like that PK movie. You place a white sheet with a stone. Put some candles, agarbatis or whatever you have. Okay. Then you put around 200 rupees. That too in coins. Either coins or notes. You put it like that. Then you send someone to pray in front of that. Okay. You send someone, like he should look like a student. You should send someone to pray. And tell him to put 50 rupees or 100 rupees. Small amount only. Tell him to put 50 rupees or 100 rupees and say, God, give me exemption for, which is the first exam? Accountancy. God, give me exemption for accountancy. Some people will say, one fool is there, he is actually praying to that stone, okay? People will say like that only. When the exam gets over, you tell that same person to come from the classroom and said, thank you, God. I'm sure that I will get exemption. I will never forget you. Then again tell him to put 100 rupees. Then those students who have written exam and went wrong will come. I think tomorrow onwards, I too have to put some money. Yes, they will put. Okay, they will put. And tomorrow send another person like this. He is going over there and putting more money and say, God, again do this. 2-3 days, it will pick up. On the third day, you see, students, others also, who have no idea what is that, will come and put money. Okay, my cost is only 50 rupees. But what I'm supposed to get is an exemption. Let me take a chance. Let me take a chance. They will put, definitely, yes, this will happen. This is the most profitable thing because you have no cost. You pay something to that boy who acted like a student. Are you with me? Are you with me? But the original God someday will pull your collar. The original God will definitely come. Day, Ennada, what are you doing? That God will definitely come and pull your collar. And this is one of the most profitable business that you can run in India. Nityananda is a best example. Come again? He started a country. That is another level. Yes. Yeah. So, Saduranga Vete. There is a movie like that. Okay. No, his new tax rhyme, no tax. Okay, whatever it is. So, imagine a situation where you're getting back this money. Okay, once you have claimed it as bad debt and you're getting that particular money, then when you get back that particular money, you show it as your income again. Are you all with me? Are you all with me? So that is all about the bad debts. Now moving on. Expenses on family planning. We will complete 36 and 37 before the lunch break itself. Yes. Okay, I'll create a scenario. I understood what you said. I'll create a scenario like that. Don't worry. Say, what he says is like, imagine 10 lakh was the bad debts. 10 lakh was the bad debts. It's not a section, okay. It's actually a, what you can say, it's a logical thing, okay. It's not a section again. Imagine 10 lakh is your bad debts. Are you all with me? 10 lakh is your bad debts, and in books of accounts, say, you claimed only 7 lakh as bad. 10 lakh is your debts, not bad debts. 10 lakh is your debts, and in books of accounts, you've claimed only 7 lakh as bad. So that means, and you claimed it as a deduction under 36. You claimed it as a deduction under section 36. Are you with me? If you're claiming only 7 as bad, then what is your expectation? What is your expectation now? The debtor will pay you 3. He is supposed to pay you 10. But he told me that I don't have 10 lakh money, but I will pay you 3. So you're expecting 3 lakh from that person. You might have shown this entire 10 as income. But in the next year, say this is in year 1. Year 2, he told me that he will not pay 7. So you said okay, and you have written off 7. Now you are expecting how much? 3. But in year 3, he is coming and paying you 1 lakh as full and final settlement. As full and final settlement. Are you with me? In year 3, he is coming to you and paying only how much? Only 1 lakh as full and final settlement. You tell me what to do. You are expecting 3 now, but you are getting only 1. Again claim that 2 lakh as what? Bad debt. Why 2 lakh as bad debt? There is no treatment for that 1 lakh. Why? Out of 10, you got only 1. Already that 10 you shown as income. You got only what? 1. Are you with me? Are you all listening? Out of that entire 10, you got only how much? 1 lakh. In year 2, you claimed only 7. That means you are expecting 3. But in year 3, you got only ultimately 1. Out of that entire 10, you got only 1. Already in year 2, you claimed 7. Now you can claim 2 more as a deduction because out of 10 lakh, your total loss is 9. You claimed only 7 in year 2. Are you all with me? For that 1 that you got, there is no tax impact. Is that clear? Is that clear? Say instead of this, in year 2, you have shown that entire 10 lakh as bad. You have shown that entire 10 lakh as a bad and claim deduction. Then what will happen? And you are receiving 1 lakh. Then what will happen? That 1 lakh have to be your deemed income. Are you all here? Is that point clear? So this is called as full and final settlement scenarios. You need to compute it accordingly. Have you understood what I said? Yes. Come again? Then? Okay. You ask the question, yeah. Ask the question. What is the question? Mm-hmm. Okay. See, your original debt was 1,50,000. Your assessing officer allowed, you claimed 1,50,000 as, how much is the original debt? Not given in the question. Can you show me that question? Okay, so you're saying 1,50,000 is the bad debt that you have claimed. Okay, but the assessing officer only have given you 1 lakh. So there is an expectation of 50,000. You should receive 50, but you received 1,20,000. That's what you're saying. If you receive 1,20,000, out of that 1,20,000, you deduct 50. The 70 will be your income. Yes. No? I mean, that's what your doubt is. What to do with that 70? 70. Because out of 1,50,000, your expectation is full will become bad debt. But your assessing officer only given 1 lakh. Now, ultimately, due to the force of assessing officer, your expectation is 50,000 that you will get. But you got 120. If you get 120, out of that 120, anyways 50, you know that you will receive. So out of that 120, you deduct that 50. Then the remaining 70, you have already claimed as bad. That 70 will become your deemed income. That should be the treatment. Yes. If I've claimed everything as bad and I got something from that which I've claimed, then that will become my income. Got it? This is, I think, almost the same with a different figure. That's it. This is the scenario. It's called as full and final settlement scenarios. Yes. Moving on. So we were discussing about the bad debts. Don't worry, you don't have to write it because I've given a note. I've given actually a note for the full and final settlement. Can you read this note? If on final settlement, the amount recovered in respect of any debt where deduction had already been allowed falls short of the difference between the debt due and the amount of debt allowed, then the deficiency can be claimed as a deduction from the income of the PY in which the ultimate recovery out of the debt is made. Ultimate recovery means as full and final settlement. Yes. Moving on to the next one, friends. We were discussing about the bad debts. Now, let's compute the other things. What is the next thing? Can you read the next thing? Expenses on family planning by a company. Listen. What do you mean by family planning? Because the major problem that we are facing in India is the population. To control the population, say an employer, being a company, is taking some initiative, conduct a program or do something to promote the family planning culture among their employees, then that is actually a cost for the employer. And that cost have nothing to do with their business. But still you are doing a good thing. You are supporting the country in a way. So you do one thing, you claim it as a deduction under 36. But for claiming deduction under 36, the assessee have to be, read, assessee have to be a company assessee. For all other deduction which we have discussed right now, there is nothing that the assessee have to be a company and all. The assessee can be any assessee. But to claim family planning expenditure as a deduction, you have to be a company. Are you all with me? Are you all with me? For claiming this family planning deduction, you have to be a company. It's mandatory. So, listen. So, first of all, friends, we can split this into two. We can split this family planning expenditures into two. Family planning expenditure by company. into 2. Number 1, capital nature family planning expenditure. And there is revenue nature family planning expenditure. Say for example, there is a company and that company have installed a machinery. Just like our Lace and Coke vending machine, they have installed a machinery where you will get the pills and other medicines. Just like condoms or something, they will disperse it. If you swipe your employee card, you will get the pills and other things from that particular plant and machinery. That cost of the plant and machinery will be a capital expenditure. Are you all listening? The cost of plant and machinery will be a capital expenditure. That cost you can claim as a deduction under section 36 in 5 equal annual installment. If you're incurring a capital nature family planning expenditure to promote family planning among your employees, you can claim that cost as a deduction in 5 equal family planning expenditure. Are you all with me? Number 2, see, you require the machine as well as the medicine. To fill the medicine, the cost that you have to incur will be a revenue nature expenditure because you have to fill the pills and all. For that expenditure that you are incurring will be in the revenue nature because you have to fill it regularly. So if you are incurring that, the revenue nature expenditure is allowed as a deduction under 36 in that year itself. You don't have to claim it in 5 equal annual installment and all. You can straight away claim it as a deduction. Are you all here? So the family planning expenditure by a company can be divided into 2. Number 1, capital nature, and number 2, revenue nature. And the capital nature expenditure is allowed as a reduction in 5 equal annual installment. Revenue nature expenditure is allowed as a reduction in that respective year itself. And what is the expenditure? It should be a company, and that expenditure should be an expenditure to promote family planning among their employees. Are you all with me? Have you understood what I said? Have you understood what I said? Yes, excellent. This is capital and revenue. Now imagine a situation where you don't have adequate profit to claim that 1/5 of your capital expenditure. Say you don't have adequate profit to claim that 1/5 of capital expenditure. You tell me what to do. Carry forward it to unlimited subsequent year. The treatment is same as that of unabsorbed depreciation. You carry forward it to the unlimited subsequent year. Only what? Only the capital portion. What about the revenue portion? That will form part of the normal business loss. And ultimately it will go up to 8 years only. The capital nature family planning expenditure, that 1/5, if you are not able to adjust it with your current year profit, you carry forward it to how many years? How many years? Unlimited subsequent years. Is that point clear? Is that point clear? All right. That is under section 36. So moving on with the last 2 deductions under 36. We have 2 more deductions under 36. Can you read the next deduction? Deduction of security transaction tax paid. Simply means, what is security transaction tax? It is not income tax. It is but a direct tax. It's a direct tax. You have to directly pay it to the CG. So you tell me, when you have to pay STT? Come again? Whenever you are buying or selling securities from a recognized stock exchange, you have to pay a small percentage. It made to around 2%, not 0.2%. Okay. In the last budget, they have raised it. You have to pay a small percent, like 0.2%, as what? STT. On what value? On the transaction value. Both the buyer have to pay and the seller have to pay. Are you with me? Whenever you are purchasing or selling securities through a RSE. What is RSE? Recognized Stock Exchange. You have to suffer security transaction tax. Are you all listening? If you are paying security transaction tax, now the question is, can you claim that as a deduction? The answer is yes, but subject to one condition. What is that condition? Your business income should be from purchase and sale of securities. Your main business profit should be from the transaction of purchase and sale of securities. That means if you are a full-time trader, you can claim the STT paid as a deduction. Say I'm a chartered accountant. I'm investing in some listed share only for an investment purpose. Can I claim that STT paid as a deduction? No, I cannot claim. If my business income is from purchase and sale of security, I can claim that entire STT paid as a deduction. Are you all with me? Is that point clear? Similarly, there is a tax called CTT, that is called as commodity transaction tax. Whenever you are purchasing a commodity from RSC, what is RSC? Recognized Stock Exchange. What is commodity? Crude, gold, platinum, silver, then currencies. These are commodities. Whenever you are buying commodities from a recognized stock exchange or through a recognized stock exchange, you have to pay commodity transaction tax. Now the question is, can you claim commodity transaction tax paid as a deduction? The answer is yes, but only when if your business income is from purchase and sale of commodity, then you can claim the CTT paid as a deduction. Otherwise, you cannot claim CTT paid as a deduction. Is that clear? So STT and CTT treatment is almost similar. STT paid is allowed as a deduction, subject to one condition. Business profit should be from purchase and sale of securities. CTT paid, it is allowed as a deduction, subject to a condition that your business income should be from purchase and sale of commodities. Is that clear? Is that clear? Yes, shall I complete 37 also? Or do you want a break right now? Shall I complete 37? Great. So that our deductions are over. Then in the afternoon session, we can freshly start with the disallowances. Okay. There will be some more theory, disallowances, but disallowances is not that fun as deduction. It's a little bit dry again. Okay. I mean, I should tell you the truth. It is a little bit dry, but one disallowance, sure, there will be. See, these things which you have discussed, you go check the past exam question papers and you go check the September exam question paper when you are writing it, okay? When you are writing it only, you will be able to see the September exam question paper, okay? Now, these things which we are discussing in this 4-day session, trust me on this, it will definitely come. Because all the core parts I have selected. That's why I don't want to select, see, when the Case Academy team called me, they told me that to cover certain topics within this 3 days or 4 days trip. So initially I was thought of taking PGBP and capital gain only. Then I thought covering PGBP and capital gain only will be like, it will be fun for 4 days. But rather than the fun, when you write the exam, you should get a benefit. Okay, you should write the exam, you should get a benefit. Whether it is free or paid, whatever it is, whether it is a free session or paid session, whoever attends, invest their time should get a benefit. So I thought of selecting the core topics. We have selected all the core topics from the 5 heads. This will definitely come. I'm not saying whatever we covered will only come, but whatever we covered will definitely come. That's for sure. That too for at least minimum more than 20 marks they will ask. More than 22, because we have taken all the core topics. We have taken all the core topics. You're not taking only selected portion, you covered all the topics. And no, I've only taken selected topics. But that is the truth here. I can say that I've covered everything. Okay, don't worry at all. No, it's not like that. I've selected topics only, but the topics which I left based on the research, that they normally don't ask these topics. Like 35D, they never asked. Okay, sale of scientific research asset, under 35, there is another topic, never asked. So there are certain things normally institute don't ask. But you have to study it in exam. Why? Because we cannot say that they will never ask in future. We can only say about the past. Are you with me? Are you with me? So only based on that selection, this is what I believe. Definitely the questions, more than 20, up to 30 marks you can expect. 30 will be very high, but still I can say that. Up to 30 marks you can expect. From the topics that we are covering, definitely examination question will come, that's for sure. So, moving on friends with the residuary expense, and that is the last deduction that we have. And what is the speciality with 37? Tell me, what is the speciality with 37? See, deduction started from 30 and we are about to finish it, and the last session is 37. What's the speciality from 30 to 36? Specified. What are you about to claim that have been clearly mentioned? Say for example 30, building related forecast. Rent, rates and taxes, insurance, current repair. 31, Plant and machinery related to cost. Current repair, insurance. 32, depreciation. 35, scientific research. 35, DDA, voluntary retirement. 35, AD, deduction for specified business. 36, insurance premium for stock and stores. Second one, insurance premium paid for the health insurance. Third one, bonus or commission. Likewise, everything have been specifically provided. Are you with me? But when it comes to 37, don't expect that, because 37, what department say? Based on the conditions, if an expenditure satisfies this 8 condition, then you can claim it as a deduction. Otherwise, don't claim it as a deduction. If an expenditure satisfies this 8 condition, you can claim it as a deduction. Otherwise, please don't come and ask for deduction. This is what 37. It's general. Because income tax department is not able to predict all the expenses of a business. Why? Because there are a lot different types of businesses out there. Are you with me? So they're saying if an expenditure satisfies all these 8 conditions, you can claim it as a deduction under 37. So can you read the heading, like the first sentence? Any revenue expenditure which is not specifically provided in any provision discussed earlier, that means from 30 to 36 of the Act, and fulfills the following conditions shall be allowed as a deduction under this section. Let's understand which all are the 8 conditions, and I'll definitely leave you for a break after that. So can you read the first one? The expenditure should not be of nature described in section 30 to 36. Why? If it is covered under 30 to 36, then why you are dragging it to 37? You could have claimed it under 30 to 36 itself. Are you with me? This also means don't take double deduction. One expenditure deductible under 30 to 36, done. Don't even think about 37. Second one. It should have been incurred by the assessee in the accounting year. It should have been incurred by assessee in the relevant accounting year. Then only you can claim it as a deduction under 37. Then, what is condition number 3? It should be in respect of business carried on by the assessee, the profits of which are being computed and assessed. Say for example, I have a textile business and I have fertilizer manufacturing. Can I mix up my expenditure? No. For a respective business, whatever the expenditure is, you have to claim from that respective business itself. Are you with me? I have 3-4 business, always categorize and claim it accordingly. You have to always maintain separate computation for each type of business. Don't mix it up. Are you with me? Are you with me? Then, what is point number 4? It must have been incurred after the business was set up. Don't come and ask for the pre-commencement expenditures under 37. Whatever the expenditure that is incurred after the business was set up is only allowed as a reduction under 37. And what is the next one? It should not be of the nature of any personal expense of the assessee. Don't come and ask for your personal expenses. 37, no personal expenses are covered. Always disallowed. You cannot claim any of your personal expenses as a deduction under 37. What is condition number 6? It should have been laid out or expended wholly and exclusively for the purpose of such business. What is wholly and exclusively? Think about me. To come and teach, I should have dress. So the dress cost is actually my business expenditure. To come and teach, I should have food. So all the food that I'm having is my professional expenses. To come and teach, I should have a house. So all the house that I'm staying with my family is a business expenditure. To come and teach, I should sleep. So all the bed, cuttle, pillow, etc. is my business expenditure. Can I say like this? Can I say like this? No, I cannot. Why? If an expenditure is exclusively incurred for my business or profession, it's okay. Otherwise, not okay. Say I have undergone an open heart surgery. Okay, and I'm saying that only after open heart surgery I will be able to teach. Can I claim that open heart surgery cost as a business expenditure? No. Why? Because I'm doing open heart surgery for my life. If I'm alive, I can teach. So which is the more predominant, or that is actually predominantly for your life only. It has some connection with your business. We are not denying it. But it should be exclusively for your business or profession. Are you with me? Otherwise, every personal expense, they will say it is a business expense. Are you all with me? Are you all with me? Even I can say, my son's education expense. He is the future MD of my company. For the future MD, I am investing. Yes or no? Otherwise, everybody will start claiming every expenses by stating that it has an indirect connection. It's not personal expense, da. It's my fourth of son is the future MD of my company. So I have to invest in his education. I cannot claim like that. That's what they are saying. Wholly and exclusively for the purpose of business only, I can claim as a deduction. Then what is item number 7? It should not be of nature of capital expenditure. Don't come and ask for any capital expenditure. You will not get it as a deduction. All the capital expenditure, what should be the treatment? What should be the treatment of capital expenditure? Capitalize and charge depreciation. Don't come and ask for a deduction under 37. And what is the last one? An expenditure should not have been incurred by the assessee for any purpose which is an offense or prohibited by law. What does that mean? All the legal penalty that you pay to the government, you cannot claim as a deduction. Listen. There are 2-3 things. Say, for example, I'm a goods transporter. I got a consignment. I have to immediately deliver certain goods from Chennai to Coimbatore. I think you require minimum 9 hours to go by road. 7 to 8 hours. So I completed my journey in 5 hours. It is 200 per hour. I was speeding at 200, even faster than Vande Bharat. Okay, I'm even faster than Vande Bharat. I was like speeding like anything. The Tamil Nadu Motor Vehicle Department penalized me for overspeeding. They normally have this camera and all, right? I think they will come up with that interceptor camera in the highways. They may. Okay, say they come up with them. Come again? Yeah, whatever it is. So they come up with some interceptor camera and they penalize me. So you tell me, is this penalty my business expenditure? In a way, it is yes. Why? Because my client clearly told me that I have to immediately deliver this thing. And he's paying something extra also for that immediate delivery. Then we can say that immediate delivery is my business requirement. But I cannot claim it as a deduction. Why? Because it's a penalty for violation of law. We will not get it as a deduction. You violate any law, you will not get it as a deduction. Are you with me? Are you with me? But there is one thing. This institute will easily deceive you with one adjustment. Say, for example, you and me entered into a contract. According to the contract, I am supposed to supply 10 bottles of water. I am supposed to supply what? 10 bottles of water to you by tomorrow. I am supposed to supply how much bottles? 10 bottles by tomorrow. If I am not supplying it by tomorrow, I am supposed to pay you extra 1,000. I am supposed to pay you what? Extra 1,000 as penalty. Are you with me? We can say it is a penalty or a damage that we have inserted in a contract between two persons. Now I was not able to, or I am not able to deliver it tomorrow, and day after tomorrow you charge 1,000 rupees from me. Day after tomorrow you came to me and charged that 1,000 rupees from me. You tell me, can I claim that 1,000 as my business expenditure? Can I claim that 1,000 as my business expenditure? The answer is yes. Why? It is not violation of any act, and it is actually not paid to the central government for violating any act. It is only a contractual penalty that is paid from one person to another person. Are you with me? Contractual penalties are definitely deductible, no doubt. If it is a penalty on violation of any act, don't say that it is a violation of contract act. It is a violation of contract, not contract act. In contract act, they are only saying that you can write damages. That's it. Are you with me? Another thing. How about GST interest? Forget about GST interest. What about GST? Can you claim GST paid as a deduction under 37? Can you claim GST paid as a deduction under 37? The answer is subject to a condition. What is the condition? If you are not claiming input tax credit, you can claim the GST paid as a deduction. If you are claiming input tax credit, then GST is not going from your pocket. You are claiming a credit. Then you cannot claim it as a deduction. Is that clear? Is that clear? Another example. How about GST interest? How about GST interest? It is allowable as a deduction. Why? It is not it is compensatory in nature, not penal in nature. GST interest for the delayed payment, I can claim it as a deduction. It is what? Compensatory, not penalty. How about GST late filing fee? I cannot claim because that is actually a penalty. Late filing fee means penalty. Interest is not penalty, it is compensatory. I can claim it as a deduction. Have you understood what I said? Have you understood what I said? Then, other examples under 37. Employee salary, power, fuel, electricity, then traveling expenses, stationery expenses, printing charges, legal charges, audit fee. Everything will come under 37. Are you all with me? Sir, can consumer paying GST, can he claim it on income tax? You can claim, but that payment should be something related to your business. Okay, say for me, I'm having food in the evening from a hotel and they charge me GST. Can I claim that GST as a deduction from my professional income? No, not possible. Because that food I'm having has no connection with my business or profession. That is only for my personal consumption. You got it? So by that I can say section 37 is completely over and we can say the deductions are also completely over. Now you are free to go. Go complete your lunch, finish your lunch and come back at 2:20. Okay, 2:20 you can come back.